the final talk of the day, so I think the best thing to do before we start off is say a big thank you to the App Promotion Summit organizers. It's been a fantastic event. It's nice to do this in person for the first time in 2 years as well. So, Andrew, James, Lauren, Emily, thank you so much for this. It's been a great event. We've really enjoyed it. So a round of applause to you guys, please. Thank you. Thank you. And so, yes, I'm from Sensor Tower, and what Sensor Tower does is provide market intelligence for the app space. We can help publishers understand how their competitors are performing, either by looking at things like downloads, in-app revenues, active users, as well as advertising campaigns or ASO strategies that their competitors may be running. And what we're going to do today is run through our outlook for 2022. A lot of it is, of course, going to be built on what's happened in 2020 and 2021. But there are some key trends that we've seen emerge because of the pandemic that is very, very promising. And I've been in this space now for 8 years, and every year we say this market's going to be growing, and we're hoping there's some point, some end to this growth or some stabling out. What we've noticed, actually, it's quite the opposite. It's been a huge 2021. 2020 was massive, of course, because everyone's locked away. And 2022 is looking to be even bigger as well. And I'll run you through that over the course of the next couple of minutes. So to start off with a market overview, as we can see on stage over here, downloads have peaked massively during the pandemic. We saw that during 2020, especially once the world closed down, a huge spike in downloads, as you'd expect, although they are, of course, petering out in 2021. Growth has slowed, but there is growth, and I think that's the important thing here. Every single quarter post Q1 has had at least 35 billion new downloads of apps in this space, so it's absolutely not slowing down. And if we look at the European picture in particular, what we can see is that the major markets like the UK, like Turkey, like Germany, continue to be very, very strong. The bigger picture here is actually the revenue side of things. Now, obviously, there are conversations that I'm sure everyone here who monetizes in the app is often having when they talk about going through the Apple or Google ecosystems to monetize. You know, there's that big battle that Epic's involved with Apple. A lot of language learning apps that are attending here today are trying to obviously move outside of the app store payment mechanisms, at least once they've acquired users. Despite that, and actually in spite of that, what we can see here is that consumer spending hasn't actually petered out or stabilized in 2021 post the sort of lockdown boom. In fact, it's growing and continues to grow, and it's actually sort of year on year, it's up 15%. And actually versus 2019, it's up 52%. So just imagine this, over the course of the last, we've been around in this space for a long, long time now. There's been a 52% increase in revenue in just 2 years, and that's despite everyone trying to get away from Apple's and Google's payment mechanisms, which is a fascinating prospect to think about, particularly as we talk about and think about acquisition outside of the sort of paid methods. There is a strong case, as we've seen, especially when looking at retention, around how you're working with these two big platforms. The other big takeaway here, and I think it's very, very important to look at, is the growth of some of these markets outside of the EU5. So Russia continues to grow, and it's a market that everyone should be paying attention to. The Russian market and the Turkish market are actually the two fastest, or amongst the two fastest growing markets in the world for revenue. And it's actually projected to be the #1 market, Russia is, for growth across all of Europe next year as well. So what we've noticed is a lot of big European brands and American brands actually focusing on that Russian market, and that's actually been bearing, fairly profitable fruit, and so it's definitely something worth looking into over 2022. And as you can sort of see there, with the that sort of 30% year-on-year growth, it's the fourth line. That's a very strong growth rate there. So as we do talk about the growth rate as well, I think one of the things I want to talk around outside of Russia is Turkey. Turkey's rounded up the top 5 in terms of where we see the projected growth. Huge mobile market. It's 80 million consumers, all of them practically have smartphones. Very, very urbanized, right? 20 million of those live in Istanbul. Young population, majority of them under 25. And so the market, as we know, is already a strong one in terms of the mobile talent that sits in country, but also the spend is growing incrementally as well. That's despite a weak lira as well. So there's something to be said here around how much is being spent in Turkey, despite the fact that actually it's a currency that continues to degrade. And again, Russia and Turkey are what we would say are the big bets for 2022 across non-gaming, but also gaming categories too. As we talk about categories as well, I do just want to sort of focus on some of the trends that we saw in 2021, which are feeding into what we see for next year. The UK is a good marker to understand what recovery is going to look like, mainly because to some extent, the UK hasn't been as proactive as enforcing COVID rules across Europe. And because of that, a lot of companies sort of see how the UK economy has been rebounding and what that looks like as a marker for the rest of Europe. And so whilst business apps did very, very well in 2020, we all tried to download Slack and Zoom and meet as quickly as we could once we all got locked up in our homes, and some of us also were unfortunate to have to download some of Microsoft's social networking apps as well. What we saw off the back of that is that growth continues to remain pretty strong across the business space, and this is an index data point, and what's fascinating here is everything on screen is up at least 20% from pre-pandemic periods. And again, what I'm trying to say from this picture, and that includes travel, by the way, what's important to see here is across the board, mobile adoption has been massively, massively accelerated because of everyone being locked at home and being more reliant on their phones. Parts of the market that previously wouldn't have accessed apps or wouldn't have needed to access apps now are. And because they are, there's an opportunity to go after an untapped market that previously wouldn't have thought to download mobile apps. The other thing I want to point out here is travel and navigation is back, at least in the UK, because of the fact that whenever there is some kind of relaxing and lockdown rules, we see that pent-up demand really make up for those huge dips where, it's 40% of its Q1 2019 value in Q2 2020. Actually, now it's more than recovered. Where we are looking at travel, and I want to just jump in this real quickly because I think whenever we talk to our customers, the first thing that they ask is, why is travel doing so well? The key thing here is that it's not just urban travel apps that have started to do well again as people are thinking about multiple ways to get around the city. We've heard from multiple city municipalities that the ride-sharing apps or the bike apps or the e-scooter apps have been doing particularly well. But on top of that, we are seeing accommodation apps for travel doing well as well. So Airbnb, actually, as we can see here, has more downloads in 2021 than in 2019. So especially, for example, we have some of the service providers in the room who maybe have travel customers, that now is the time to be spending in this space, particularly because we've seen travel companies, Hopper's a very good example, take advantage of local changes in lockdown rules and specifically target those markets. So Hopper's a really good example, just to sort of digress from here, where the day, for example, there's an easing in lockdown in France, a campaign, a concerted campaign goes out across the board only in that market, and there's a huge acquisition play, which actually does convert pretty well into active users and engagement and retention as well. And so we've seen some other apps follow that same suit, but because transportation, travel, accommodation has done quite badly for the last 2 years, a very targeted approach has driven a big increase and a big rebound in the summer of 2021. The other thing that's, I think, a big standout for 2021, and we didn't expect it to be as strong as it has been, is that workout apps continue to be popular. One of the things that we saw is a big sort of split in the strategy for how different workout apps managed the pandemic situation. We had stuff like Nike Training Club that made the entire app free and just integrated a shopping app in the corner, and that was their monetization model. We had Strava tidy up their subscription model, so you only had one subscription model. And then some people like Peloton went down the ASO model. You know, you didn't need a bike anymore, and it was very clear that if you typed in at-home workout, the only app you'd ever find is Peloton. And so that's something worth pointing out in this view here. So if I can focus you first on the bottom right corner, one of the big changes that Peloton did pretty much as lockdown was announced across Europe was change their app name from Peloton Live Workout Classes to Peloton At Home Fitness. Obviously, for most people in the room familiar with ASO, that was obviously in order to rank better for those particular keywords, and that absolutely did make a difference. Those huge gains that we see in growth for downloads post-lockdown actually are fairly strongly maintained now. So if we look at January 2020, which normally is a good month for health and fitness apps, versus even, say, September 2021, that's 3 or 4 times larger in terms of overall downloads, because as people haven't fully shifted to going back to the office, people have found that actually workouts at home can be just as effective. And there's, this is a company, Peloton, previously, who people have very much questioned their business model and profitability, and now it's doing particularly well. They make more money now from their app subs than they do from selling their bikes. And that's, I think, an important story here, too. Strava Strategy was very, very different. And again, we're talking about this because what we're going to see here is some form of a normalization around app subscription trends. What Strava did, and we see those big spikes in each August, is it's the quietest time of the year for health and fitness apps. What they tend to do in this month, and what they did in 2020 and 2021, is put this sale on where there's a 40% discount nearly on an annual pack or an annual subscription. And as a result, we see those huge, huge spikes in revenues, going up from under $1 million the previous 2 months prior to nearly $2 million in a single month. And then I think the other thing that's worth pointing out here is they simplified it. In a very, very noisy space, what Strava realized is, everyone is either giving away free access to workouts, or there's a gold membership, or 7-day trial. They have one standard pack, and actually as a result of that, if we track that black line over there, the consumer spending, if you were to draw a line of best fit through that, is obviously, we're looking at something closer to about a fairly average $250,000, $1 million in revenue pre-pandemic to sort of something closer to the about $2.5–3 million mark as well. So a 3x increase just by normalizing their offering and not making it super confusing. So the key trends, and this leads into 2022 and what we expect to see here based on the massive changes in demographic trends we've seen whilst people have been locked up at home. Our 3 big bets for 2022 are around the social audio market. We saw sort of Clubhouse became a very, very popular talking point and one of the most downloaded apps in the App Store and the Google Play Store in 2021. And the social audio market will remain extremely important. We've seen from the finance and the fintech app data that cryptocurrencies, and buying cryptos is back. We're back to sort of 2016, 2017 levels of engagement across the board. And now that fintech apps that aren't just Coinbase or some of the more niche players are now adopting trading crypto, it's seen a big, they've seen success in that effectively. And then the last one, and I think this is a fascinating trend going well beyond 2022, is actually live stream shopping. And live stream shopping in particular, I think, is a trend that's here to stay. It did absolutely come out of the pandemic. It was, to some extent, born out of the pandemic because apps that previously had existed in the space, like Whatnot, and weren't growing, have now grown massively and continue to grow. And that sort of social proof element or that network effect element of what Whatnot does has meant that everyone has now followed suit. And I'll show you what this looks like. So if we look at Clubhouse, early 2021 launch on the iOS store. In May, they followed through with the Google Play Store. Of course, you see those peaks. It's very easy to ignore the fact that outside of those peak periods as well, you know, 400,000 downloads, you know, pretty regularly, 300,000 to 400,000 downloads pretty regularly. And this has actually opened up a dearth of competitors in this space, a lot of the standard competitors you see. So everyone you see here has tried some form of social audio. If we look at people like Spotify, they've been making acquisitions with Findaway, with Anchor, particularly around social audio content creation. And what we can see here is that this isn't something that's short-term. There is a clear trend with Twitter Spaces, Facebook Live Audio, Spotify's Green Room as well, where social audio has become something that people are very, very much engaging in and want to continue to engage in, because obviously it's less one-sided. Spotify in particular is one to look out for, because everything that they do tends to sit within one app. They don't sort of break that off. So how accessible an existing, you know, an existing demographic that they already have access to is able to be switched on is quite quick here. Because, for example, if you're looking at Facebook audio, live audio, or if you're looking at something like Discord stage challenges, a lot of the time it's not directly in-app, whereas what Spotify is doing is putting everything they do right in front of the consumer from the get-go. It's going to be a messy and noisy app, but it will still be the one where, you know, podcasts, audio, some form of sort of books as well, and music will all be in one place. The other thing that we're seeing here, and I talked about crypto, is the fact that finance actually across the board in terms of compound annual growth is actually the quickest growing category since 2019. I'll skip through and explain why. The downloads mirror almost identically the price of Bitcoin. So, you know, we didn't learn from sort of the last sort of boom bust cycle, but you know, what can we do? We're all but human. And as we see Bitcoins rise over the early parts of 2021, downloads in fintech apps do well, and then they start to slow down ever so slightly in the summer, and then peak up again as sort of, you know, Bitcoin and other crypto starts to recover. This is, I think, a really powerful picture. There's not really much to say around it apart from the fact that if we look at Robinhood, which, you know, largely deals in stocks and shares and ETFs, and Coinbase, their downloads mirror each other. It's the Robinhood's user base is now pretty much only focused on buying crypto. You know, it doesn't, you know, you're not physically holding the coin, so as a result, you know, Robinhood don't charge fees, and therefore, you know, they're actually taking a big chunk of Coinbase's users away. The main trend that I want to talk about here, because I think this is a far more timeless trend, is around live stream shopping. So live stream shopping's been around for some time. You know, as I said, Whatnot's been around for some time. You've got Network, and essentially, it's been a way over the pandemic for people to engage in some form of social element when it comes to shopping. Live stream shopping has accelerated across the US absolutely massively, and the top apps in this space are essentially now competing with the biggest e-commerce stores in the US. If we look at the top apps that are testing live stream apps, these aren't the top shopping apps, these are the top apps globally. If we look at the top apps globally, or at least the US, but if we look at the top 15 apps in the US, a third of them are testing out some form of live stream shopping. That's a huge number. And this isn't a new thing, by the way. You know, China, Taobao introduced this in 2016. So there's precedents to look at the historical data and see the success of this going forward. But, you know, Taobao's been doing this for nearly 6 years. But the interesting thing here is all the big sort of social networks here have a live stream shopping element to it. And big retailers in the US are participating with these social networks. I think a few people might know the really good example of Walmart running an event with TikTok. I think it was this time last year. And they had 7 times more users engage with a Walmart event on TikTok than they'd expected. and actually increased their TikTok following by 25%, all through one small live streaming campaign. So we were talking about multiple ways in which brands and publishers acquire new users or maintain those new users. And we talked about sort of, I think Tandem, we're talking about influencer marketing, and that's very, very relevant. At the same time, that social element is also worth pointing out when we look at why people engage with influencers or why people engage with the content. And this is kind of what it looks like. So for example, over the top left, we've got a dude talking in the corner about what he's buying or why he buys it. And you flip, you can just basically select what you want and buy essentially very often within the app. The Walmart event that I'm talking about Walmart TikTok event is up there with that gentleman in a blazer. But the scary thing in all of this is Amazon's now involved. So obviously, Amazon didn't make enough money during the pandemic. So what's been happening here is they've launched their own live stream where all the stuff that you probably didn't buy from them, like pots and pans and all the other nonsense, is now available on the live stream. There are incentives to follow the live stream. It's discounted pricing. And I think, what are they selling there? They're selling some sliced something or the other. So yeah, Amazon's involved in this. So if Amazon's involved in it, I think we should all be taking this seriously. And then where it works in the fashion space, particularly, is with Shein. I don't know if you've heard of Shein, but it's essentially the Gen Z go-to app for fashion now. Sort of, it's kind of, eating, ASOS, Boohoo, Pretty Little Things, breakfast, lunch, and dinner. And they've got into space really quickly. They do live stream events. There's an incentive, of course, to be involved in live stream events because of discounting. And if you buy during the live stream, then first of all, they're able to get demographic information, one, but two, that there's discounts associated with that too. So the two key things I want to point out in between the crypto trend that we've talked about is the social audio and the social buying element is important here. So as we talk about some of the limitations in this space that have come through with ATT and iOS 14.5, to some extent we're seeing those somewhat negated by the fact that commerce, at least, or monetization in mobile isn't that difficult because people are willingly engaging with a lot of content within apps rather than between apps. And so yeah, just to sort of follow up, it's very clear that 2020 meant that a lot of people were using apps. They had to stay at home. But 2021 has seen growth, surprisingly, even on the 2020's record year. And next year, we're expecting even, this is a sixth or seventh year in a row I've had to say this, but even more downloads, even more active users, even more time spent in apps. We do expect consumer spending to not grow at the same rate, but it will continue to grow. And travel will be the app that continues to recover better than any other space. And what we're noticing already is some of the bigger players that are slower to react, Skyscanner is one of those, have really fallen by the wayside, while some of the newer upstarts have actually grown in downloads, market share, active users, retention, so on and so forth. So how you're engaging immediately after easing and lockdown from a marketing and engagement standpoint has been very effective for them. And then, just to sort of finalize what I've said here, social audio and social sort of retail transactions are probably where we're going to see the most change. I think given how much investment we've seen sort of some of the big players like Spotify, Twitter put into social audio, but also Amazon now putting into sort of social retail transactions, what we're going to see over the next year or so is most of your favorite apps now having some very clear social element from the very, very get-go, or as standard too, as we see people finding some ways to stay social whilst often having to be at home or not wanting to go out and spend money in physical stores or have the same opportunities to meet with friends as often as they would like to. So that's our overview of the market. Thank you very much. And I'm happy to take questions if there's time. I have 0 on there, so probably not. No? Yeah? Yeah, sure, absolutely. Cool. Thank you very much.